Good morning, good morning. There is the market pulling back a little bit here, initially on the very first candle of the day. How are we doing today? Hope everyone's having a great morning so far. SPY is right around one of my major ranges that I've been watching for, around 684 to 685. In pre-market, it actually bounced off 684. Started coming back a little bit there. Got a nice bounce and recovery. Right back up to that upper end of the range, 685.50, even 686 is what I'm watching for today. I want to see a clear break of resistance, but of course that's not happening here at open with the way the market is turning over. Pretty big pullback. I'm not surprised by this, honestly. It's nothing too terrible that worries me here. Let's go, Mason said. Rick said, good morning and hello, everyone. Hump day. Love that commercial with the camel. I don't think I've seen that one. I gotta see it. Yesterday was Taco Tuesday. I didn't partake, though. It became McRib Tuesday for me. Good morning, Autumn. Alexander, Iceman, Jack Black, Tangy, Joe Papa, Chai, Tangy Man, of course. It's the mini Palantir, BBAI. Whoa. Whoa. Tangy Man said, what's hot? BBAI, it's the mini Palantir. Holy shit, you weren't kidding. Tangy Man, it really is on fire today. Wow. Big Bear at open is up 14%. It gapped up a little bit, but look at the amazing run. Wow, touching $7 right now. 15%. Sheesh, it's going to be leading the watch list like for certain. Oh, yeah. Yep. How's Navitas? Pulling back a little bit. AMD's up over 8% here. We had some big news come out with AMD. Lisa Su. Yeah, Lisa Su dismisses AI spending fears is a pretty good headline to explain it, I would say. B of A Securities reiterates buy. They maintain a 300 target. Wedbush reiterates outperform, maintains 290. Lisa Su said that we must have manufacturing in the United States, says thinks export controls make sense given national security. That's a pretty good statement to make. If Nvidia's like, hey, let's get rid of these export controls, and AMD says, hey, we'll just make them in the US for the US, oh, that could spur some contracts or something. I don't know. Obviously, Jensen and Nvidia is doing a lot in the US too, so don't get me wrong there. A lot of investment in the US, or at least commitments. That's a new record for us, Rick said. All the mentions of McDonald's and McRibs within the first 3 minutes of open. Yep. Nano-nuclear energy up 2.26%. DraftKings actually coming back. This is a big comeback that I'm watching on DraftKings. Doesn't mean I think it's going to totally recover from the bottom, but I think it's coming back in a pretty solid way. Excuse me. You know, it's doing pretty good here. Novo. NVO had a really good move yesterday. Watching them for another possible pop today. Love the way Novo's starting to run. CRWV is leading the downtrend. CoreWeave. I wouldn't necessarily say that. They're actually up 3.7% on the day. Huh. They have been lately, though. They've definitely been pulling back. Oklo made the comeback. They were actually down last night. They ended up making a recovery move. They held above 100, which is good. Definitely watching that big money put play from recent. I don't think the earnings can maybe help this one too much. We'll see. I still think they can pull back a bit more. The MSA? What's that? Looking at more of a sell-off on the QQQ. Does seem like it's pulling back here, doesn't it? Pretty big pullback from open. Still green on the day, but running into some support. No, what's the announcement? I don't get it. What is that? Like, what's the MSA? Oh, something with filing? Ah, I see. TSLA pullback today. Pretty large, down to 437. Watching for a possible breakdown there. If we break that down, that could be a great area for a continuation scalp. So far, though, it's bouncing there pretty strongly. Coconut said they should have thought about U.S. manufacturing 40 years ago. Yep. In the 80s, yeah. Your timing is right on there, Coconut. I like it. PLTR down 2%. Palantir. Trying to find a support range down around this 185 point. It did just barely extend down there, touch it, and now bounce back up. Definitely not the best price action, though, but at least we're recovering back here. If it keeps accelerating, it'll become really, really nice. It's good to see it re-breaking through that bottom. Resistance there at 187.35. Any ideas what today's Fed speeches will be about? Not totally sure there, Autumn. A lot of times they surprise us. I would expect some actual, like, substance, though. I am a lot of the times they will end up actually moving markets or saying something that can, impact the price action for a little while. We'll see, though. We'll see. All of them won't be as important as the others, but I guess we'll just see which ones traders decide to grasp onto, right? That's really what's important. With all the drama going on, I would think that they have a lot to go over. Yeah. One thing I'm really expecting a lot of talk about is the lack of government data, and then also the fact that some of this data might start coming back in. This data that's been releasing over the past few days is going to keep coming out here. Let me find this. Here we go. Check this out. We're going to actually see data release. All of the data that we've missed is going to be scheduled to come out. Like, for example, the employment data from September is going to come out about 2 days after the government opens. Retail sales. Looks like it's going to come out about 9 days after the open. GDP is going to come out even longer than that. So it's a bit weird. But, keep in mind that that one's from October 3rd, October 16th, October 30th. So it makes sense that there would be extended time there. But it looks like that will happen until we start to see more data hit. They're saying here that, like, some of the employment data for, like, October might not release, or CPI, like, they don't even have a date for it, really. Kind of strange. Yeah, it's just because there's a lot of uncertainty with it, Autumn. Yeah, and if it ends up coming out and showing that, showing that employment, like, sucked really bad or something, it might ruin this short-term uptrend that's going on. Like, the market might be doing great the past few days on the government shutdown news, but then this jobs data comes out and then SPY might flush right back. So, yeah, it's a bit strange, bit weird. And keep in mind that those dates that I was showing too, these are not hard set in stone dates. These are like just scenarios that people are looking at, but it will, I've seen a lot of talk saying that, like, the employment data will be about 2 days after, but the rest is all up in the air, honestly. I'm very curious. Some of it, they're wondering if it will even come out or not. Man, SPY pulling back. 683.95, yeah. Nvidia leading it down, G-Dog said. He said, here we go, Nvidia turning it over. Okay, yeah, down 0.09%. I added in it was leading it, but... Tommy Tender's wacky stonk sorting mechanism. Mag 7 dumping, G-Dog said. Palantir down 2%. Still watching that one. trying to recover up off the lows. Tesla down around its low of the day. Let's see, Microsoft trying to double bottom. Not sure it's going to be able to hold it up. Apple actively dropping down around 1% as well. Good old Google. Oh, wow. One of the worst ones here. Down 1.4% and actively dropping with some pretty nasty looking price action. Let's pull up that Mag 7 setup. Oh, yeah. Looks pretty rough, especially those 4 on the right. Oh, my gosh, yeah. The entire thing looks brutal. Yeah, it's a pretty crazy drop there from all these stocks. Meta, Nvidia, wow, they're all breaking down. SPY following down as well. SPY's almost a break even on the day. It's about to go red. I'm not surprised. I'm surprised it's not red yet, actually, is the weird part. CRCL is still dumping, Autumn says. Circle with their earnings, of course. Pretty rough drop off. It said that they beat estimates, but they ended up falling a lot. I didn't end up reading into it too much, Autumn, but found you the news. CR said bought Moderna at 23.57 for short term. Seems to be going pretty great. mRNA. Nice. Yeah, mRNA, pretty nice action here. I don't blame you. It's not a stock I usually like, but if we look at the daily chart of Moderna, it bounced off of this lower support range, and it's starting to move in a pretty fantastic way. It doesn't mean it has to go straight up from here, but I'm definitely watching for more of an upside move than not. How's Disney doing? I know we've been watching them off support too. They're looking pretty solid. Oh yeah, held their support well. Love it, up to 116 almost. SPY coming down a bit, Canal said. SPY. Pretty large pullback there. Oh, yeah. Filling the gap in a pretty crazy way. It just filled the gap, so watch out. It might just keep flushing, though, with the way stocks have been looking, but it just filled it, so don't be surprised if there's a little, like we're seeing right now, like a very slight green hit at minimum. Again, this is just a 1 minute candle. It could actually turn over within the minute and still go down, but, you know, this is a big area where it fills the gap. And it's a big support anyways, but... Printorama, Tangy says. Wow, G-Dog's out another 1.4 thousand. Let's go. I'm printing. Hey, dubs in the chat for G-Dog here, guys. That's pretty solid. Out for another 1.4K. There we go. Freaking printing it today, man. What else did you trade? It's at all-time highs, so it's neutral, Canal said. I don't know which ticker we were referencing at that time. It sounds like Tarkov music. For those of you that have played Escape from Tarkov. Doing well with QQQ puts. There we go. There we go. That's what I like to hear. 620 support just touched on QQQ. See if it can hold that range. I think the full game comes out this month too, Jose says. What full game? Oh, Tarkov. I got you. Never mind. I was like, full game. I forgot about that. Man, I haven't played Tarkov in like 2 years, but I used to love that game. G-Dog says I'm not going to be homeless anymore now. I'm changing my game, my life. Hey, I'm glad to hear that, G-Dog. I won't be homeless, though. Making me laugh out here. CLF up 4.3%. Looking pretty good today for Cleveland Cliffs. A lot better than many other stocks today. Oh, there we go, Michael. Maybe something better. Care said his SPY coming back. Is that called Red Sec? Yeah, SPY, it has been bouncing here. The big question is, will we actually get a comeback, or will it be another one of these periods of consolidation on the way down before another eventual drop? It kind of reminds me of this period of comeback right there. Remember that we could start to get news. Let's see what time those Fed speakers start coming out. Looks like 9:20 Eastern. 10 a.m., so 9 a.m., so 5 minutes for Paulson. Waller can always have some impact. I haven't seen any headlines yet, really, for it, but... yeah, here we go. I do see some from Williams a while ago. He says, I'm closely watching markets for liquidity signals. He said, will not be long before reserves are at ample levels for bank reserves. That's all I really see, though. I'm not seeing too much more besides that. Maybe we'll see more come soon. Oof. SPY just tested the low of the day pretty quickly there. Actually made a low of the day, funny enough. Oh yeah, Demure. It's pretty insane how bad the Mag 7 looked for the first little while. We can see every single one of them is bleeding here. Demure said, did I miss something? No, nothing too crazy right now. Nothing too insane. QQQ pull back. I think we're just seeing a normal pullback here in the market. I actually saw some positivity today. You know, AMD was moving up in pre-market. SPY was gapping up initially, but it just kind of filled the gap and turned over. I guess it's not really that bad of a downside move whenever we look at how much the SPY has went up since the low of Friday. That was like a 3.7% jump. I guess it's not really that much either. But for a few days, it was pretty solid price action nonetheless. Pretty consistent there. Give me one sec. Anybody else's stream breaking up, or is it just me? It probably had a little lag again. The entire Mag 7 was fully green pre-market. Now it's mostly red. Ouch. QQQ pulling back more. Let's see Tesla. I got some inspectors coming over today. Gonna have to greet them and let them inside. They get to listen to the stream for free, in person. Thanks for VA in Autumn. Like a home inspector. It's like stuff you do if you're like buying a house, for example. Demure. That type of stuff. No problem. I feel like I'm always having lagging issues. I thought it was just me. It could partly be both of us, Autumn. It could partly be both of us. Hey, Tom, is SoFi resistance 3250? Thank you. Let's see. SOFI. Oh yeah. You guys know. Is SoFi resistance at 3250? Let's see. 3240 intraday, but let's zoom out and see what we're looking like closer. Yeah, 3250. Yeah, I would say 3250, 3255, right around that range. Coconut said Tom got a new van. I live in a van by the river. Autumn says, dude, AMD. I just want to buy a ton of it at this point. Anyone got 10K I can borrow? I heard you can call JP Morgan Chase and see if you can get a loan. No, I'm kidding. I don't think they actually do personal loans at JP Morgan, funny enough. I think that's like the one thing they don't do. For those of you that use them. Would you play puts at 32.50? Let's see. That was on SoFi. Gosh, it'd be hard to snipe it there. I feel like if it runs up and touches that today, there's a shot it could keep going with how much it's ran up already. Man, that one would worry me. Oh my gosh, look at this trend line bounce again on SoFi. Here, I'm going to control Z. Look at where my trend line was before. SoFi actually came all the way out, touched the trend again, and had a perfect bounce back. Holy shit. I wish I would have sniped it there. That's crazy. And they got back above that downtrend again, too. Pretty wild, like longer term wedge. Sheesh. I don't know. Yeah, I'm pretty worried that they might keep going here, though. That's my big concern. There's always a shot that, you can try to play it and actually get puts there. It's not a bad play. From a risk-reward standpoint, you would just have to cut pretty quickly if it runs past, in my book. But from risk-reward outlaw, I think it's in a great risk-reward setup for sure. The risk-reward is there. It's just, there's always that offside risk. For some reason, I don't like it, but I feel like it's still a solid play. CCCX now up 5%. Churchill Capital Corp. Ooh, starting to come back up. What was this one? Invictus or something like that? It's a strange name. Inflection. 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 It's a weird name. There's like a Q. INFLEQTION. Inflection or inflection. I'll have to look up how to say that. Let's see. They actually have a YouTube channel. They have like 1,000 subscribers, but that's they seem to actually post on it.
And we're building the entire... Inflection is a global quantum...
Inflection. Okay. I figured it was inflection. It seemed like it was a play on words there, or a play on letters, kind of. But inflection. Yep. What do you think about stocks like Bilibili and Tencent? I'm not a big China stock person. I do like to trade them from time to time. Tencent, I don't really love here where it's at. Yeah, it's right around resistance, kind of rejecting a little bit. Tencent, the other one was Billy. I also don't love Bilibili. Just recently touched a big resistance and rejected back down again. Just not my favorite setup here at resistance. I think it's more in pullback mode right now, where we're starting to see larger pullback come into play. Doesn't mean it's going to fall all the way down to 20 or anything, but I could see some supports come down to test again or test lower in the range. How are some of the other ones? Baba's starting to really turn over. Uh-oh. Baba's support's giving out, guys. Uh-oh. That's not looking good. How about KWEB? Oh, yeah, turning over as well. CWEB? Oh, this is just a leverage. JD is another one that had earnings last week. Or no, they have earnings this week, actually. If JD has bad earnings, they start breaking through support. Uh-oh. I'm not going to be very bullish on many China stocks. Yeah, I'm moving to Chicago, Mason, because I'm trying to combat global warming. I think it'd be cool to live up there. No, I'm kidding. Kidding, guys, kidding. Is there a better China ETF than FXI? This is just actually a China large cap ETF for an internet ETF. You know, you can look at KWEB, which might be better. Oh, sorry. I don't know. FXI seems pretty hard to beat. Yeah, it does. Let's just go from April lows to the high. KWEB popped up around 55%. From the April lows to the high. FXI popped up 45%. KWEB might be a bit more advantageous, being in that it's focusing on the internet group. Robinhood 2, shit will fall with crypto. HOOD. Very overextended recently. One of the hotter stocks this year. Give me 1 sec, guys. The dang inspector's late. I have a feeling once they get enough people on calls, market's gonna fall real fast. SoFi's gonna drop like Weeble. Hopefully not that bad. Let's see how bad Bull has been dropping. Today it's up 3%, but... oh, God. Even in the short term, it pulled back quite a bit. And SoFi is about to make a new all-time high. Sheesh. It did technically. It did. It got through resistance a little bit. See if it continues or not. It did post a big wick right here, which means we could start to see it drop. Yeah, it is, Tangy. Gotta love the IPO. What was that one IPO that everyone wanted and then it messed up? Was it Figma? Or was it... Figma was one of them, but there was one that was worse, I thought. It definitely helps support that side, Outlaw, that's for sure. Definitely helps support that side. It could always still break through, but that wick is a good indication here, initially. Probably stop out past like $33 or something. Maybe even just $32.80, $32.85, something like that. Keep it pretty tight. There we go. SPY turning again. Oof. You guys think that this is a little dead cat bounce on the SPY right here? Getting a little dead cat bounce action. Oh, yeah. Whoa. Mason's he got their cards back graded by PSA. Said that they got a Fernando Tatis rookie debut card. Came back Gem Mint PSA 10. Wow. That's sick, man. I actually have a whole bunch of like rookie Ohtani cards. And rookie Acuna and people like that I need to send in. But the Ohtani cards, they're not all the same. They might be like they have the RC rookie stamp on there, but they're not all like maybe the super expensive ones. Some might be like a debut card. Some might be like other things. There's like two versions that are like really, really expensive if you have those. I have a couple of them, but not a ton. Magic the Gathering, sheesh. I've heard of that. I've heard that stuff can be crazy too. Gold's literally doubled since 2022, D said. He said, I saw something that when gold increases in value, the currency detaches from gold. And that's historically a fall of an empire signal. Uh-oh. Better not be the case. Hang on to him till your daughter's 30. Yeah. I might get him graded, though. I do want to get him graded. It'll probably take me till she's 30 to get him back. How do you explain the drop on SPY and rise on gold today? Well, gold doesn't always follow the SPY. It has followed SPY a little bit lately, but that doesn't mean that it is always going to. Whenever we see the SPY dropping today, there's not really a ton of info or a ton of news that I was seeing to really support this push lower. I did see some Fed speakers talking. Nothing was too crazy, though, if I'm being honest. So I think that we're just seeing a natural pullback here with the SPY. I think that it's something just normal. And, you know, over the past few trading days, you know, we've had little periods of pullback, whether it was in after hours or pre-market or whatever. We have seen small pullbacks similar to this occur. Now with gold, gold's doing very well. Gold is in a class of its own, right? There's still a lot of uncertainty out there with the economy. And with all of the uncertainty in the economy, I think that it's helping support gold going up. We've talked about this a lot on the nightly videos, but there's a lot of information out there to look at, like delinquencies. You know, this was something that we looked at yesterday. Delinquencies have been on the rise this year. Pretty bad. Search terms for second jobs hit all-time highs last week. There's just a few negative factors out there with the overall economy at the moment. We have bad jobs data that's been coming out, and then this week we're going to get, well, if the government opens today, we'll probably see data hit Friday or Monday probably. So get ready for some of that data too. Unusual Whales just made a post. Said that nearly half of U.S. adults aren't confident they could find a job now, per AP. GLD up. There we go. Man, SPY. It's really testing this lower range in a crazy way. I'm hiring, but so far all applicants have been idiots. USPS is hiring, James said. Will they hire idiots? Probably so. Coconut said, Gen Zs are the worst. My friend will not hire anyone under 40. Whoa, James said they hire everyone. Hey, there we go. They don't want to do 3 at one time. I guess that makes sense. You should argue to them, Tangi, that if you did 3 at one time, it would make them competitive against each other, and then they would they might work better or harder because they all want to compete against each other. Ha! Autumn goes, poor Gen Z. Oh, sheesh. QQQ just might be posting up a higher low here. Right around 620, starting to bounce a little bit. Two nice green candles so far. If we do get that higher low to post, we might be seeing a base form, and we might get more of an uptrend there. Nvidia actually is right on its base and double bottom here. Wow, it just posted a very nice double bottom. You watched a video called 3 at One Time? That sounds like a spicy video, Coconut. Tangy Man said, Tom, I made that exact argument. Oh, that'd be perfect, yeah. Nvidia back to 185 wouldn't be crazy. No, definitely not. Definitely not. See if that double bottom gives out. I think it has a chance to at some point today. Got pretty close to the lows from yesterday, too. I think we're going to hit 270 on AMD. But they just said, do you think 270 today, I think would be pretty hard. I don't think we will today by any means. Do I think that we will ever? Yes. Do I think it'll come right now? I do. I think it could come pretty soon. Yeah. I think it could come within the next few days. Especially if we get another good trading day tomorrow. Imagine if AMD starts to do this type of stuff. You know, it might just do that little consolidation right up to 270. Yeah, I like the PA. I can see it continuing. Demir's out. Peace. See you later, Demir. Oxy is maintained at underweight. Got any thoughts about Oxy? Maintained at underweight. I don't have anything too crazy about Oxy right now. Maintained at underweight kind of sucks. Well, hang on. Let me go read it. Let me go read it, CR. There's a lot. Oh, there's a lot of difference. Okay, so HSBC adjusted their price target to 54 from 55 and maintained a buy rating. Wells Fargo adjusted it to 40 from 42 and maintained an underweight rating. JP Morgan adjusted it to 51 from 50 and maintained a neutral rating. And yeah, but Wells Fargo lowering their price target to 40 was pretty rough. That was a pretty weird thing to hear. Maintained at underweight as well. I mean, HSBC maintains a buy. JP Morgan maintains neutral. So I don't know, if you have a buy, you have a neutral, and you have a negative. I guess we would just call it neutral. No, it's a bit weird, but the main thing with Oxy right now is watching oil prices. You know, Oxy has not been doing the best because oil has been sliding off. You know, now there's a lot of people making arguments that oil will hold this support range, and ultimately the oil will end up exploding up. I mean, maybe that's the case. I personally don't think so. I don't think so, given everything that we've seen. One more minute, guys. Gonna check with if the inspector's here yet. 1 minute. The moral of the story is don't run with the herd. Tangi's in Cali. Varun. Tangi said, oh, or Autumn said, oh no, never mind. I long-term hold and have enough cash to live through any crash. That's the Buffett way, Coconut says. Hey, there we go. That's what you want to hear. Have enough cash to live through the crash. It's a pretty good rhyme. $92% gain on BBAI. I'm done, Steve the Sauce Man says. Hey, 92%. That's badass right there. Congrats to you and Dubs in the chat. That's nice to hear anyways. 20% jump. I'll tell you what, this is a pretty insane stock here today. Stock is wild. Seems like it's almost doing like a bull flag right here, doesn't it, guys? I'm just going to manually draw this because it's not perfect, but almost seems like we're bull flagging. See how it goes. I don't think that these inspectors are showing up. Meta is going to go down further, it's D says. Meta's pretty big drop off here. I don't know if it's going to keep going down. That's pretty straight down. 1.8% as well. Pretty strong. Look at that Mag 7 setup. SPY's about to make another low of the day here. And there it is. Joe Papa, don't forget to hit the like button. Thank you, sir. Definitely don't destroy that like button today. Destroy it up. Also, subscribe if you're new, of course. A lot of craziness out here. Amazon pulled back pretty hard, but some of these stocks are down so much today, at least from open. It's hard to keep looking for continuation. It has been only an hour. GLD might go down to market open levels after this jump. Let's go back to GLD. Whoa, there we go. 384.08. Wow, there we go. This is crazy with GLD, how bullish it's actually become intraday. I'm starting to lose faith in Meta's investment in VR and glasses. They need robots, Coconut said. I think that the glasses could be pretty sick. I've actually been thinking about buying some of those Oakley glasses that they have. But at the same time, I'm like, well, hey, is that better? Or should I just get like a GoPro hat? Or like a helmet or something? Man, GLD pumping here. SPY pulling back. Man, SPY starting to really turn over. Failed to break back through resistance. Goodbye. Goodbye, goodbye. 682 next support coming up soon. It's about 30 cents away. Here's 682. See if it touches or flushes. Might just flush down. Let's see. Usually we get hits at these big spots, but we might not. The bull case for silver is solid like a bull. Mess with the bull, you're gonna get the horns. In silver's case, here's the horns. Let's actually throw the bull up here, see what it looks like. Oh, it's a backwards one. Darn. Is Besson speaking? Let me check. Yep. It says that they are speaking. I have to register to watch it. Oh. You guys want to watch Besson speak? I guess that's just perfect timing for the music to end there. That was like literally perfect timing. All right. Whenever he does start speaking, this is what it'll look like. I will do it if I can. It says the remarks from Besson come at 10:45 a.m. to 11:10 a.m. And is that Eastern time? Yeah, it should be Eastern time. So it should be like in 5 minutes, really. Let me pause this really quick. Yeah, I can't hear anything coming from this, so. We'll get it hopefully whenever it starts. At least. Chevron's CEO said that the liquid national gas market will be oversupplied for a period of time. Wow, that's pretty strange. Kelly Blue Book says the $20,000 market for cars is extinct. Kind of is, isn't it? Oh, that. I thought it was hilarious how he went into PR save mode and telling people they'll receive their 2K and tax breaks from the beautiful bill. Or you mean the 2K, the $2,000 tariff payments? It might not be tax breaks, but that would be probably a better way for them to do it, if we were being honest. I think people would hate it, though. Tesla down 2.15%. Oh, no. So big, so beautiful. Oh. The way that they name those things are crazy. I've always heard that if it has a good name to it, it means the total opposite. Bitmine's up. Up barely, 1.2%. They say crypto's down, SPY's down. Crypto did just fall over pretty hard. Bitcoin really fell over here, actually. IBIT pulling back. I know, right? It's never gonna stop, D. It's never gonna stop. I feel like I've never heard such crazy names until DJT. Maybe I just wasn't paying attention. Oh no, his are definitely funny and crazy. For sure. For sure. Let me see some of the... like Obamacare or something. Let me see some bill names here. Oh, there we go. It's one of them that, like the USA Patriot Act of 2001. It allowed like the expanded surveillance and stuff like that into terrorism, but they ended up using it against like anybody really. There was like a lot of weird stuff with that. I know. That was one of the popular ones, the Patriot Act. Trying to think of other ones. ACHR, a buy now, Healthy Cooking says. Healthy Cooking. Send me some recipes. In the off-topic channel. What happened, D? Steven says, with being hurt, I have no idea how to even pay rent. I definitely don't make enough trading, but even I think a $2,000 cash payment is a bad idea. It's got to come from somewhere. Hopefully the tariffs make it okay, but I wish that they would just put it all into the debt, right? They should use all the money for the debt. Oh my God, D. That would be terrible.
Okay, everyone, we're gonna get started.
Oh, here we go.
Please take your seats. If everyone could please take their seats.
Take your seats right now, or you're all going to detention. Autumn goes, I've been sitting. All right, let's see what Besant has to say.
Get started here. Please be quiet.
Please be quiet.
All right, everyone. We are going to get started. Please. Hi. We're going to start the conference back up here. If everyone could be quiet, please.
I'm never gonna stop.
Thank you. Thank you.
Talking.
Hi, welcome back to the conference. It's my honor to introduce Scott Bessent, Secretary of the Treasury, who will be delivering keynote remarks. Scott Bessent is the 79th Secretary of the Treasury. Prior to government service, Mr. Bessent had a 40-year career in the global investment management business, including at Soros Management, and is the founder of Key Square. A South Carolina native, Mr. Bessent was also an adjunct professor at Yale University, where he taught economic history. So please join me in welcoming Secretary Bessent.
Big group. Good morning. It's an honor to be here. To begin with, I'd like to thank the New York Fed for hosting this meeting and inviting me to join you. It's fitting that the Treasury Market Conference is held each year in the fall. Late fall offers us the opportunity to both look back and to look forward. And since the fall of last year, much has changed. November 24 marked an inflection point for the nation and its fiscal future. The American people had just elected President Trump to put the country on stronger financial footing. The previous administration had run up the highest deficit in U.S. history outside of a recession or wartime. As a result, inflation had skyrocketed to generational highs. Families watched their hard-earned savings melt away as prices of consumer goods climbed even higher. Seeking a course correction, voters elected President Trump in a landslide, and they gave him a clear mandate to make America affordable again. My commitment to that cause, to improving affordability and putting our fiscal house in order, is what motivated me to come up from behind my desk in the private sector and to enter public service. As the 79th Treasury Secretary, my duty is to serve as the primary caretaker of the Treasury market. Maintaining a robust Treasury market and even strengthening it further is essential to making America affordable again. That's because Treasury yields set the global risk-free rate. Domestically, the risk-free rate sets everything sets pricing for everything from bank loans and home mortgages to stocks and corporate bonds. In that sense, treasuries are not only the bedrock of the global financial system, but also the American dream. Treasury yields have a trickle-down effect on the broader economy that determines whether a young family can afford a home, a college student can buy a car, or an entrepreneur can get a small business loan. The work we do here directly impacts affordability and quality of life out there, which is why we must succeed. The good news is we are succeeding. The U.S. Treasury market is more robust and more liquid than it's ever been. The Treasury Department has made significant progress in increasing demand and expanding accessibility to U.S. debt. We are poised to make even more progress towards this goal in the months to come. Purpose of my remarks this morning, twofold. First, to highlight the depth, breadth, and enduring importance of the U.S. Treasury market, and second, to outline the strategies we're using to keep it that way. As Treasury Secretary, my job is to be the nation's top bond salesman, and Treasury yields are a strong barometer for measuring success in this endeavor. By this metric, we are making substantial progress in keeping rates down following the spending blowout from the Biden years. In fact, the U.S. Treasury market has been the best performing developed world bond market this year. The Treasury market's total returns year to date are 6%, its best year since 2020. The U.S. 10-year term premium is basically unchanged, while U.S. borrowing costs across all other areas of the curve, from 2-year notes all the way to 30-year bonds, are down year to date. Lower Treasury borrowing costs mean lower corporate borrowing costs, lower mortgage rates, and lower car payments, which all translates to greater affordability for all Americans. Other developed bond markets, by contrast, have had nowhere near the same success. Some countries have seen demand for their debt reduced or even dry up, especially at the long end, and they've had to react by curtailing sales, but not the United States. We continue to see robust demand at Treasury auctions from a wide range of investors, including foreign investors whose holdings of Treasury securities are at record levels. This impressive performance comes in spite of the negative rhetoric and doomsaying of market pundits, especially this spring. For the past 10 months, the press has been pushing a sell America narrative. But the data and the price action have been saying the opposite. Buy America. And the market always rewards those who put fundamentals over fear. Suffice it to say, the Treasury market remains the deepest and most liquid market in the world, which is a testament to the efficacy of the Trump administration's economic policies. Investors around the globe trust the Treasury market because of its utility as a safe, liquid, and reliable store of value. Treasury securities are used for a wide variety of purposes in the financial system, including as a vehicle to finance the U.S. government, as a means for the Fed to implement monetary policy, as an asset for global investors, as a high-quality collateral for a range of different transactions and institutions, and as a reference benchmark for a wide variety of other borrowers. Daily trading volume for U.S. Treasuries averages around $1 trillion per day, and that's just in cash securities. Volumes in associated derivatives represent another major source of liquidity. During periods of market volatility, volumes in the Treasury market increase substantially. When markets continue to facilitate effective risk transfer despite unexpected events, that is a sign of things working. Having traded many different markets across the world throughout my career, it is moments when markets stop trading that most concern me. It is impossible to eliminate market volatility altogether, and that's why our goal must be to ensure a robust and resilient market that can withstand volatility when it inevitably arrives. To that end, Treasury is pushing several forward-thinking initiatives to strengthen the Treasury market. This includes the Treasury buyback program, which is an important tool in supporting market liquidity. While the program has been a success so far, we continue to look for ways to improve its efficacy. We have already expanded the size of the long-end operations in the Treasury buyback program and will expand the counterparty set in the first half of next year to continue building on the progress we've made. Treasury is also supportive of reforms to the enhanced supplementary leverage ratio, or the ESLR. In its current form, the ESLR risks becoming a consistently binding constraint rather than a backstop to risk-based capital requirements. That can distort banks' incentives to engage in low-risk activities such as Treasury intermediation. The ESLR must be improved to prevent this distortion. Expanding central bank clearing is also key to strengthening market. The SEC is currently leading an effort to expand central clearing in the Treasury market, which will enhance resilience, expand netting opportunities, and standardize risk management. This effort also supports competition in the marketplace as several central counterparties are launching new business lines to facilitate the expanded clearing activity. Demand for U.S. Treasuries remains as strong as ever, and these strategies will help us feed that growing demand. But equally important is maintaining Treasury's regular and predictable issuance framework. Our guiding principle at the Treasury Department is to finance the government at the least cost over time. The phrase over time acknowledges that Treasury issuance decisions are not to be made ad hoc, but rather as part of an overall strategy to accomplish our goals over the long term. And the regular and predictable issuance framework has proven to be the most effective means of achieving those goals. Although Treasury has regularly sold Treasury bills for nearly 100 years, it generally sold coupon securities on an ad hoc basis prior to the late 1970s. At that time, the rising federal debt burden rendered the previous ad hoc approach infeasible, and Treasury adopted regular offerings of coupon securities that have continued to this day. Thus was born the regular and predictable issuance framework. There are manifold benefits to this framework. First, regular and predictable issuance promotes transparency and investor confidence by giving market participants a clear, consistent auction schedule. The single price auction format further supports strong participation and fair pricing. Second, by spreading maturities evenly over time, regular and predictable issuance limits rollover risk and avoids large concentrations of debt coming due all at once. Third, it reduces supply uncertainty and the risk of a market premium that could arise if investors' unexpected shifts in issuance. Finally, regular and predictable issuance reinforces Treasury's role in setting the global risk-free rate, providing a reliable reference point for other borrowers and financial products. To implement this regular and predictable framework, Treasury sells all its securities at a regular cadence and sizing based on a transparent schedule, and it adjusts coupon issuance gradually over time. Gradual adjustments are more important for these securities because of their duration. Our guiding lights in thinking about appropriate adjustments are durable trends in investor demand and Treasury's assessment of the issuance mix that best achieves its low-cost borrowing goal. In making these decisions, Treasury stays in close contact with investors, utilizing bilateral engagements with many of you in the room here today, and it solicits the advice of the Treasury Borrowing Advisory Committee and the primary dealers. When borrowing needs change quickly, bills are our issuance shock absorber. Because we want nominal coupon securities to adjust gradually, bills play an important role in managing changes in borrowing needs that are seasonal, short-term, or unexpected. Bills also facilitate flexibility, particularly in times of uncertainty and amid quickly evolving changes in demand profile. Importantly, being regular and predictable does not mean that Treasury's issuance policy cannot or should not evolve as investor demand changes. If our borrowing outlook changes, so will the amount we issue. And if structural demand for certain products or tenors evolves over time, we will be responsive and adjust how we allocate issuance accordingly. For example, we are closely monitoring growth in money market funds and the stablecoin market, which are both large investors in Treasury bills. Money market funds are now valued at about $7.5 trillion, having grown by nearly $1 trillion in the last year alone. The stablecoin market, meanwhile, is valued at around $300 billion and could grow tenfold by the end of the decade, thanks to the innovation made possible by the Genius Act. As money market funds and stablecoins grow, so too will the demand for Treasury bills. In addition to growing demand for Treasury bills from money market funds and stablecoin providers, we are witnessing increased demand from banks as they shake off the excessive oversight that has held them back. Since the start of this year, bank portfolios have expanded their Treasury holdings. Additional reforms, including the potential ESLR reform I mentioned earlier, could further accelerate this process. As Treasury watches these trends play out, we will assess whether they are structural or temporary shifts, and we will adjust our long-term issuance plans accordingly. For Treasury auctions to be successful, we need to be attentive to market participants, but we will not change our overall protocols. We will remain analytical in our decision-making, adjusting issuance gradually to avoid market disruptions. We'll provide public forward guidance to the extent practicable, and we will regularly canvass the market for feedback on how our issuance decisions are being received. Now, let's look to the year ahead. At Treasury, we have already provided forward guidance that we will likely not need
Brother, this guy stinks!
for at least the next several quarters. Existing financing capacity from current auction sizes and robust demand in the bill market have given us flexibility to manage our upcoming potential borrowing needs. Recent developments have also given us additional time and flexibility before we need to make any such decisions. These developments include the reduction of the national deficit and the FOMC's announcement that they will start purchasing Treasury bills with proceeds from their MBS holdings. At the most recent TBAC meeting, the committee determined that the current issuance mix is well positioned to balance a low cost of debt with the low volatility of a productivity boom. While keeping proper risk management in mind, our long-term economic outlook is consistent with an expectation of increased productivity stemming from an additive boost of artificial intelligence, increased investment in the United States, and elevated capital expenditure investment. As such, we will continue to monitor trends in investor demand, and we will continue to consider where and if additional issuance could best achieve Treasury's debt management goals. When and if the time comes to make changes, we will be prepared, and we will socialize our plans with market participants. Now allow me to offer a few thoughts in closing. We are gathered this morning in New York's financial district, historically the beating heart of global capital. A few blocks south of here is the New York Stock Exchange, while today's venue is Wall Street, or maybe in a few years it will be Y'all Street in Dallas. My main audience is and will always be Main Street. I answered the call to serve because I wanted to help President Trump usher in a new era of parallel prosperity. a decade of economic expansion where Wall Street and Main Street grow together. President Trump's golden age stands to benefit Americans on every rung of the economic ladder, and maintaining a strong and robust Treasury market is critical to that goal. Properly managing our nation's debt is a solemn responsibility that will affect generations of Americans to come. That's why maintaining a healthy Treasury market and strengthening it even further is my foremost responsibility as Treasury Secretary. Treasury is committed to safeguarding the world's benchmark for stability while ensuring that the American people can borrow, build, and thrive. By keeping the risk-free rate low and the Treasury market strong, we are making America affordable again, and we are ensuring that our nation's prosperity endures far beyond our own time. Thank you for being our partners in that project. Thank you.
Thank you, thank you, thank you for ending the speech. My gosh. All right, this is getting turned off today. We'll have to end the last 30 minutes of the stream in style here. Very boring one. Zero market movement. Nothing came of that, unfortunately. Would have been nice, but unfortunately we're getting nothing. Boring, yep. I had to play SpongeBob in the middle of there. Is going to lower my price at Treasury auctions. Hey. Yeah, they're definitely going to be lowering yields, I think. I can't wait to see the yields go down more, actually. TLT is a fun one. TLT. For the long term. Whoa. Sorry, looking at TLT closely here. Actually looking at some options from January 21st of 2028. Yes. Yes, very long dated options here. I like the calls going out that far. On TLT, kind of making a play at the, I guess you could say making a play at yields going down over that time, right? SPY low of the day. What? Whoa, another flush. Wow, we just got another flush through. Damn, SPY just got through again. Any news hitting here? I'm just checking. I doubt it. Besson said stable coins could grow tenfold. That was one of the big statements I keep seeing people grasp onto there. SPY starting to dump under 682. That was a pretty good support there. I wouldn't be surprised if 680 started coming into play. There is some support around 680.80. Watch 680.80 as well. I blame Nixon. You're still blaming Nixon, Tangy. That was from long enough ago, huh? Let's see. It happens to the best of us, mate. Don't worry. It will happen. It will happen. Make sure you're not getting too over leveraged or anything. In just a few. I know that you have a lot of exposure to Palantir. I know that's a big one down today, unfortunately. I pray everything goes well, but we could see a pullback. Yeah, I think this is more of just natural here. Yvonne, all shares, yep. Not doing well. Tesla too. Didn't even think about that one. Down 2.5%. Doc, I have insomnia. Doc, at bedtime. I want you to listen to this speech by Besant. You should be asleep in 5 minutes. Yeah, let's just have Besant talking about the economy. That's kind of funny. He reminds me of that guy from Ferris Bueller's Day Off. I'll have to show you guys that scene here in a second. It's funny because they actually talk about the economy. Yeah, here we go. Here's the scene. Here's the scene.
In 19...
This guy. You guys all know this guy, huh?
1930, the Republican-controlled House of Representatives, in an effort to alleviate the effects of the... Anyone? The Great Depression, passed the... Anyone? The tariff bill, the Hawley-Smoot Tariff Act, which... Anyone raised or lowered? Raised tariffs in an effort to collect more revenue for the federal government. Did it work? Anyone? Anyone know the effects? It did not work, and the United States sank deeper into the Great Depression.
Kind of funny. Always like that one. Especially because it's tariff related, right? And tariffs are kind of what's been going on right now. You know, it's topical. Very topical references here. Jeanette forgot about that. Hell yeah. It's a weird scene in the movie. It's a very forgettable scene, I'll say. Man, banks are doing pretty good today. JP Morgan, Bank of America climbing higher. How's Wells Fargo? Not bad, not bad. Not bad, not bad at all. CRWV, Aller says. CoreWeave. Daily chart. 85 to 85.20, not too bad. Falling down quite a bit here. 87.50. CRCL's under 90? Yeah. Under 90 pretty well, too. Just recently got under there. Under 100. Now under 90. Wow. It's probably going to go down to prices from after it IPO'd. CoreWeave. CoreWeave is almost to a major support. This is going to be a big test for CoreWeave here. See how close it is? Very, very close. When I'm at a coffee shop and the person called doesn't come up, I'll yell out, Bueller. You always get them laughing? That's funny. You're right. Before I bought a few shares, just left them. Weathered a few economic downturns. My money still grew and I slept well. That's nice. Those positions are new. Bought since I started swing trading, so I'm in the red. Try to let them be long term. Yeah, if you are truly just swing trading, then there's going to be some point where you have to stop out, right? You're looking at the market daily, stressing you out. If it's truly long-term, you know, you gotta be able to weather some storms, but also you gotta buy in incrementally, I would say, dollar cost average rather than a lot all at once. Just DCA in, I think it'll help, especially right now, you know, while these things fall. Like, let's say Palantir does keep pulling back, I think you could average in. One of my best positions ever came back after being very deep in the red for a while. No, I mean, not super duper deep, but, you know, like 40%. Looks like BBAI is finding good support at $7. Big Bear, 6.95. Right at 7. It might start falling under there. We'll see. SPY got flat, Canal said. PLTR pulled back a lot, 4.5%. It might be about done pulling back here. Tesla's even trying to form a bit of a base. Could see a base form. That would be nice. Some extra price action there. Let me go check and see if this inspector's here again. Still not here. What the hell? That's crazy. I have a question about how to properly add to my winners. A lot of the times I add to them, it brings my average price up, and I ended up losing my gains. Yeah. I mean, I don't really love adding to winners, if I'm being honest with you. I'm not a big fan of that. Some people are. Personally, I'm not. I'm not someone that does that. Very, very rarely will I do something like that. If I do, it needs to be like a clear intraday trend or where we really think that a good breakout will occur. But honestly, I normally wouldn't. I normally would not. I would say 97% of the time, I do not add to winners. If it's a long-term position, I'll add to winners by just averaging in. But then again, that's just longer term, so I'm not really worried about like if it goes down this year or anything like that. But whenever I look at, like, let's just say, I don't know, let's just say a 5-minute chart of Palantir. It's hard to give like a perfect example here, right? Because there's obviously hypotheticals for like every single type of trade. But like, let's just say right here, you're looking at, now, you know, it's easier said than done after the fact, right? But let's just say that you're eyeing up Palantir. Let's say that you notice like where the green arrow is pointing, that resistance is touching and that Palantir is starting to reject down. What you can do is you're looking for a trend to start to form here. So what you're going to do then is you're going to draw it out, and you're going to start to draw it out at the next peak where this green arrow is. Now what that might allow you to do is if you do see, let's just say, Palantir starting to drop here, once you see, like, let's say right here where these two wicks are, let's say that starts to break down, that's your entry. That's your first entry right there. But then let's say that Palantir runs back up and touches the trend again. You know, you might be able to add again right there. Now that's not adding to your winners. That right now you'd be averaging in more of on your entry to the downside. Now let's say that you start to see more of a dip. You know, you start to add in again here, and then you're obviously targeting somewhere underneath this low. You probably should be. And once it gets there, this would be where you take all the profit, for example, or just somewhere like in this range underneath of this low. it probably would happen more like right here because you would get scared that it was going to come back on the green candles is really probably where it would end up happening. But throughout all of that, you know, your average price probably ends up, what, like right here somewhere? So, you know, it's almost right where you would have entered anyways. I like adding to positions like that, but I need to see like a clear trend in play or some type of pattern, something that we're seeing that helps support your buying. It shouldn't just be that, oh, I'm winning, so I'm going to keep buying. You know, that's not the case. Because it won't always keep running. That's the issue there. Yeah. I mean, there are people that add to their winners as well, Autumn. And there's a, you know, there's a good argument to that sometimes, but with how volatile a lot of these stocks are, I'm not a huge fan of it. Now, let's say that, like, we're watching The Spy, right? Here's, like, Autumn, like, where it could help. Let's say that we're watching The Spy on a 1-minute chart a couple days ago. And let's just say that we're watching the recovery move happen, right? Let's say that we identify a bunch of supports, okay? All right, let's say that we sorry, I thought I heard something. Let's say that we identify a bunch of supports. You know, let's just say that, you know, you enter right here, right? It comes up, falls back down, touches around your support, starts to move up again. Now, what you could do is, like, let's say that you're watching this resistance as well on these circles for a possible next breakout move, right? For another breakout where you're going to see, you know, a larger swing come in. Now, again, that won't always happen, but once it got to this point on this circle, the circle that has multiple lines, once we got to this point, you could tell that it was testing and trying to break. Once the break occurred, you can start to actually look for that larger breakout to happen. And what some people will do is they'll start to buy in more right there because they're so convinced that this breakout is going to result and that move is going to result in more of an upward swing, and they're going to add to that lower position that they're already up on. And if they add in right here, their average will go up, and depending on how much they add in, let's just say it was right in the middle, you know, now they're averaged in somewhere on this X, somewhere in that range. So then they can keep holding and, you know, make more money as it goes up throughout the day again. But that's not going to always happen, right? That's a perfect scenario, perfect setup, perfect world. It's not going to be like that all the time. I think more traders will have issues with that than it will help. What I personally like doing for long-term stuff is averaging into the downside. I always bring up DraftKings because it's one of my best positions ever that I've ever had. And with DraftKings, you know, it was dipping to the downside, and I started buying in a bit early, probably up around like $42. But I really believe in DraftKings, and over this time, they were trying to legalize more states for sports betting and get market share up to help revenue, things like that. You know, as it goes down, you know, you're incrementally buying in at different points again. Now your average price is somewhere like 24, 25, 26. And, you know, you have to wait a while, don't get me wrong. You got to wait a little bit. You know, the stock market can take time sometimes, but it ended up coming back very, very well and, you know, hitting $55 recently, which is beautiful. Really nice action there. So, you know, you think about it like that. For the longer term, I love dollar cost averaging in whenever stocks are falling. But if you're like day trading options and stuff like that, I do not like dollar cost averaging in if you're day trading personally. It's one of those things where nothing's ever set in stone either. There's always going to be like a lot of variance based on each play. Each play is going to be different. And you'll have to analyze them and say, okay, is this one worth adding to? Is it not worth adding to? Right? Realistically, has it already moved a lot today? Does it look like it's just now about to break out? Yeah, you know, I still feel pretty good about DraftKings for the long term. Yep. Yep, still feel pretty solid. I'm looking to DCA in more on the dip here if it starts to fall a bit more. I didn't think it was really worth it here at 27 to 30, but if it starts to get back in this lower range, maybe look back at it again. More than likely, yes, Yvonne. Especially if you're doing day trading. Day trading, yes. Long-term stocks, no. In my book. But I wouldn't go nuts with day trading either. You know, you got to be able to limit yourself on your initial entry too. Like, you know, if you have like a $5,000 account, you probably don't want to lose any more than $200 or so overall, or $300 overall, you know? You don't want to get too high with it. Now let's say you have like a $50,000 account. You can up that to maybe, you know, 1,000 or 1,200 or something like that. Depending on your strat, of course, but I would think about it nice and hard before just doing it. Yeah, I would never, on a long-term position, I would never dump everything in all at one time. Only autumn if, like, the market really crashed. I mean, it would have to be, like, a very clear, like, very clear signal. Like the SPY down over 20% or something crazy. You can actually incrementally add in using cash secured put options as well. And this will help increase the amount of money that you make overall, because you'll end up getting premium. You'll get paid to buy the stock at a lower price from today. If you want to buy it today, I would use that money and do cash secured puts at lower prices for like next week or something like that. If you do end up getting in, you'll get in lower, and then you'll also get the premium, which will, you know, you can say theoretically lowers your average price, so. No, you're all good. Don't be sorry, it's all good. Yeah, degenerate, it will cause you to miss out on bigger moves, for sure. For sure. The only way to negate that would be to make your stop loss wider, but enter in with less money. So, like, let's just say, like, you know, right now your stop loss is 20%. You could make it 40%, but if you were buying 2 contracts, now you gotta buy 1. Depending on the price of the contract, of course, you know, that makes a big difference too, compared to your account size. When the price falls, you won't have money to buy more. Yeah, that's a little bit of a problem, especially since you're buying in at stocks so high. You know, like you're buying into like Palantir, Tesla, everything, when they're up around highs. That's the problem. That's the problem. But, alrighty guys, I gotta run. I hope you all enjoyed the live stream today. If you're new here, destroy that subscribe button. I appreciate you. Make sure you join up tomorrow morning. We'll be going live again. Appreciate y'all. If you need anything, let me know in the Discord, of course. Seeing some crazy price action in the market today. If you guys keep hearing some clicking in the background, I bought this new wallet. It's like a code 118 wallet with like this clicker thing on it. And it's pretty neat. It like shoots your cards up. I can't stop doing it now. It's like a fidget spinner or something. Kind of funny. But alright guys, talk to you later. Have a great one. See ya. Oh wait, before I go, live Q&A tonight, 9 p.m. Eastern. Don't forget, set your alarm. If you want some more education, hey, join up to the trading floor. Join up for the live Q&A. Mike will answer anything you want. Hopefully teach you some nice option strategies. But alrighty, see ya.